morning, traders. It's a beautiful Tuesday morning. Here's a bullish trade on S&P. To the upside, we're monitoring very important Fibonacci resistance, this level. This is a key moment on S&P, traders. This is crucial. Bullish trend is major, this level is next. Knowledgeable trader knows what to pay attention to. Boom. Scanner giving us alerts. Massive number of alerts. And that's the power of the method. 4 alerts on scanner. For the trading room, I can bring up only 1. That's how knowledgeable trader takes advantage of the market. Did we know that this is not the place to short? This is a place to monitor for long, of course. And that's the power of the method. Buy at ultimate bottom, not at ultimate top. Correct? And that remains the key. And that's ultimate precision, ultimate accuracy. So this absolutely expected. This is how knowledgeable trader protects the profits. This is key Fibonacci resistance. There is no green light for bullish rally yet. If this key Fibonacci resistance respected, knowledgeable trader pulled profits off the table and walked away unscathed. Correct? Pulling random market orders, speculating, never an option. Knowing where to enter and knowing where to expect powerful pullback from, where to enter, where to exit is a beautiful thing. Speculation in day trading, never an option. Every single tick matters. Every single tick is a key. That we absolutely expected this response, that there is no bullish rally yet, is an excellent shape. This is a key. So this is the end of the minor trend. It's a crucial obstacle on S&P. Correct? This is key, trend, target, after which knowledgeable trader moving the stop outside of break-even and scale out accordingly. So this is identical stepping stone on gold, gold 2015, gold 2016. Do you remember gold at 1,001.13? This is the end of the minor trend on gold, gold at ultimate bottom. And this is Fibonacci target next. Identical levels on gold, monthly long-term investment as you're witnessing right now on S&P. Correct? Knowledgeable trader just trail very, very closely. Knowledgeable trader who understands you need quality in your trading, not quantity in your trading. Walks away with profit, protecting the profits, scaling out accordingly to the lot size trader trades. Correct? If you're trading single, double lot, you are completely out. Only if you're trading more lots, you have lots left and you scale out accordingly. If you will ever choose to ignore this as your target, success is not possible. Price collapses from this level 70+% of the time. This is the reason for this pause. And if price collapsing completely, it's a beautiful news. Because knowledgeable trader loves being at the bottom. So trader who placed trade properly and walking away with 3.5-4 points on one lot, it is $150 to $200. If you're adding quality to your trading, not quantity to your trading, and you are adding lot size, by the end of the second month, you're trading 2 lots. By the end of the year, 10 lots. By the end of 2 years, 20 lots. You only need one trade. Your workday is over. On 10 lots, $1,500 plus. On 20 lots, 3,000 plus. You don't need many trades. What you need is peaceful, precise trading. With the help of a scanner, it's a stress-free, pain-free trading. For the trading room, I can bring up only one. 4 trades played out. Trail is placed in perfect place, right outside of decision point 1. This level is out, S&P will crash. This level respected, S&P will try higher. This is absolutely expected. This is a stepping stone. This is how market moves on every single instrument to the tick. This is a reason top Wall Street companies trading the method in US and globally. Are you surprised? Should not be. To the tick, this level is a problem. Ultimate precision, ultimate accuracy on every instrument you choose to trade. And if I walk down memory lane on S&P, this was the end of the minor trend. The start of bullish rally from 1800 reached key Fibonacci resistance. This is your investment decisions. Night of the election 2016, stunning bullish points of entry. Many months later, price reaches this level before skyrocketing to reversal zone, all in advance, never after the fact. 2018 market and sell-off. Why? Simple. Fibonacci reversal zone is reached. All in advance, never after the fact. And this is 1 minute chart right now. Identical accuracy apply in front of you. You want to trade the method as day trader and you want to trade long term? Of course. Many students do. Just never choose to ignore this target. To the tick, this is the level you must respect as your key trend target at all times, no matter what you trade. And if I take a look on Apple, shock or not, 181, the end of the minor trend, was a brick wall for 7 months before Apple skyrocketed to the next level. Before Apple reached reversal zone, where Apple been crashing from, until it reached the bottom 140 level, where Apple rallied from. Shock or not, where is Apple now? This is Apple at Fibonacci reversal zone and key Fibonacci support, all in advance, years in advance, never after the fact. And that's S&P now, just like Apple. Continue its rally. Trail respected, trail is not in random place. Shock or not. Ultimate accuracy, ultimate precision applies. And while S&P continued its scroll, let's take a look on a few other instruments, shall we? Let's walk down memory lane. Do you remember Euro in 2014 at reversal zone? Do you remember Euro at 140? Ouch! Poor Euro. Euro collapses 2 years later and reaches Fibonacci support 105 level. As I said for many years, this is lifeline on Euro. 105 is out, Euro will head to 87. 87 is out, Euro will be at 60 cents with 33 cents to follow. 105 is lifeline on Euro. This is where Euro skyrocketed from, this key support respected. Shock or not. This is Euro. 2 years later, reaches again Fibonacci reversal zone, this time at 126, and collapses completely. This is Euro now. Euro at exact key support where we monitored bullish rally on S&P from. Buyers not stepping in, this level is next on Euro. Ultimate resistance to the upside, 112 level. Buyers are weak, Euro cannot break through the entire month of August, which is identical dance as S&P had done before skyrocketing to the next level. This is exact same Fibonacci resistance on S&P as on Euro. This is exact same Fibonacci resistance on S&P as key support on Euro. So knowledgeable trader is not surprised what's happening on S&P right now. We are very close to reversal zone. Correct? Not the place to buy. The place to adjust your trail even closer. Ultimate accuracy, ultimate precision. Doesn't matter what you trade, if it's Euro or Apple or S&P long term, or if it's day trading chart on S&P. So while we continue witnessing S&P, let's walk down memory lane a little bit more, shall we? Pound. 2008, pound at 2100. What was the lifeline on pound? On Euro 105, on pound 136. Taking pound 7 years to break through this level. Pound in free fall until next level. This is pound now. There is no surprise where pound crushed to. From 136 to key trend inception. Support was not respected on pound. Despite the Brexit, pound rallied from ultimate trend inception, the biggest rally in many years. There is no rally on pound now. Bullish rally is blocked by this Fibonacci resistance. And if I walk down memory lane on oil, what do we see? This is oil at the bottom 2016. Do you remember oil at 29? Stunning place to be, ultimate bottom, where a knowledgeable trader and investor looks to buy, not sell the market. And that's the place where oil stages bullish rally from ultimate bottom. And this is oil 2 years later. Bullish rally is flawless and stunning. Fibonacci reversal zone is next. So shock or not, what's happening next on oil? It starts selling off because it's close to reversal zone. Not the place to buy, the place to exit your long. And that's where oil goes into free fall. As I say, 64 is out, 55 is next. Shock or not, of course. Not the place to buy, the place to sell oil from. all in advance, never after the fact. And this is oil now. And that's a love on oil from famous 77. And that's a bullish rally on oil. Correct? The end of the minor trend is a problem. Buyers are weak. And that's where oil is now. Stuck at key Fibonacci resistance. So if you're seeing S&P collapsing right now, it's exact same place where oil collapsed from. Reversal zone is a place to exit your long. So this morning you pulled 4 or 5 points out of S&P, your trading day is over. In the course you learn how to spend less than an hour in front of the screen. In the course you learn and master quality trading. Choice is yours, what you want to trade. And if you want to trade all the instruments, of course, why not? So please review the information on the website about the method in detail, view the webinar, and if you would like to join us in the courses, all the information on the courses pad. All the courses are live, private mentoring or group mentoring, Monday through Thursday, all classes recorded. Almost 100 live class recordings in member areas that you can watch at your convenience. Most important part of website, what students accomplish after the course. You serious about trading, you came to the right place. Pretty please read and review, and do not hesitate to contact me if you have any questions. If Gary can win Forex competition while in the course, so can you. If Wolfram celebrating his life while in the course, Wolfram is here this morning. Congratulations. If institutional portfolio manager taking the course, it means something. So please review what every single trader does and listen to the podcasts. If you have any questions, do not hesitate to contact me. I always look forward speaking with you. 925-257-4298 or info@fibinstitute.com. Thank you, traders.